What's going on, friends? Welcome back to Bangkok in Thailand. Today I want to show you simple ways to make your strategy better. If you trade something right now in the market that's not profitable or it's not close to being profitable enough, it's like break even or something, how to make it better. There's a few things you can do. And over the past few years, I've tried many different things. Some work better than others, of course. So I want to show you this through slides and let's get started right away. Now, before we begin here, I just want to point out that you don't have to use all these tips. You can use whichever one you prefer and use them one at a time so you can test them out first, see if they work better for your strategy or not. They will not all work better for your strategy, so you have to back test them first and then see the result. If it's better, you can keep it. If it's not better, you can drop it and try something different. It's just like really based on your strategy also. So some things will work well for different kind of strategies, different kind of markets. So you have to kind of try it out. But this is to bring you some ideas on what you can do to improve your style, improve your trading, and get much better results. So the first thing that for me made a big difference in my trading is looking at how you perform based on days of the week or hours of the day. So if you're a day trader, you can look at hours of the day. Some hours might be better than others. So for example, let's say your strategy works better in one session, the Asian session or the New York session, but less well in the other session, the London session, for example. So you could drop that session, you could drop these hours. Or it could be your strategy works well in the morning, but not good at night. So that's something you can look at if you connect your account to my FX book. My FX book is over here. My FX book. Most people know this site already, but I'm putting it here just in case you don't know it. I look at my stats myself in my FX book. I use this a lot to kind of filter things, and that makes a big difference. So the other thing, again, on that same topic is days of the week. So for myself, I've seen a really big difference. I've seen the difference in equity curve of looking at cutting different days of the week. So with my strategy, Wednesday is one day that I could probably cut fairly soon, but the results were still okay. Not as good as the other days, but still okay. So I still keep it. But the point is you want to figure out for your strategy which days work the best, which days work the least, and cut the days that don't work and just keep the days that work. It could be based on logical reason in the market. It could be something where most news come out on that day, for example. They come out on Fridays usually, for the US and Canada at least. Or it could be something else. You can try to look at what's the reason behind that, or just cut the days altogether that don't make any sense and aren't profitable. Of course, to do that, you need some decent data, that's for sure. Don't do this if you took only 30 trades. Do this if you took like 200, 300, 400 trades at least. And that would be a good place to start. That can make a big difference for you. The second thing is something I experiment with right now a little bit more. And I don't have any results to share with you on that. But what I've seen is, because I use Bollinger Band in the market, I found that if I use the typical kind of period and settings people use is 20 and 2. But I found that on some pairs, this works not as good. This is pretty bad. But that's if you look at no zones. Finding an example with no zones on the chart, no support resistance areas, just the Bollinger Band indicator and some cross section patterns, notably engulfing candles. I found that if you switch this to here, to a 1, it's going to be 21, that the results are much better and they perform really well on one pair. Actually, this works only on GBP USD for now, but this can make a big difference. So you want to test out different parameters. Sometimes people say indicators are for one way. Why not use them the other way? Like there's a big example, and I talked about this before, about the RSI, where people, they look at buying the pair when the RSI is oversold, selling when it's overbought, and want to do the opposite, right? The opposite could work out. You got to test it out first, see if it works. And I'll link below again, because I always talk about this, my breakout RSI strategy, where it's basically doing the opposite of what most people do, and it works really well in the market. I'm testing it right now again to bring you some stats, but it works really well, I can tell you for now. So you can check it out, link below for that. It's totally free again. Awesome, so that's one thing. The other thing you can do to make it much better is, say most people, they just want to enter a trade quickly in the market. So they might have a candlestick over here, and then right when this candlestick closes, paf, they enter a trade in the next candlestick. And then price goes against them or whatever happens. But they just want it too fast. Now, what I found for me is that waiting to enter above the high or below the low, so that would be, for example, here or here. After the candlestick closed, you enter beyond the high or the low. You put a limit order. Now, that makes for me a big difference. If I were to enter at the close here, my win rate would be a lot lower than if I enter at the high or the low, not beyond. You want to put like maybe, depends on the time frame and everything, you want to put like maybe 1 to 2 pips beyond, or maybe 5 pips beyond, depending on the time frame. But just that makes a big difference. So you want to test out, is it better if I enter faster? I get a bigger reward perhaps, right? Or is it better if I enter later? I get maybe a small reward, or maybe I can push my reward a little bit more, but I have a much bigger reliability, much bigger win rate there. So you got to test it out. That's a way that can make a big difference. I use this a lot. I believe you need a lot in this one. You can check it out for yourself. And then this one is also big, is ideal take profit levels. I'll give you a few ideas here that you can use. So fixed reward to risk, or when you enter a trade, you put your entry here, stop loss here, and then you do reward to risk that are fixed, like 1-to-1 reward to risk, so 1-to-1, and then let's say you do like a 2-to-1 so 2-to-1 you put here, and then you exit your trade half here, half here. Maybe you have only one of them. That's more basic. That can work fine. I like this technique myself, but there's a lot of other methods you can use. Why stick to one if you can find out other ones and test out other ones? It's really important to test when you are traders. We want to test different things, see how different things perform, and how we can be better all the time. Another one is near the highs and the lows. So for example, let's say you had a range here before, a range going like this. And then let's say you enter your trade somewhere here. Then, yeah, you can put your stop loss here, right? But how about if you put it near the top of the range? That could be better. You can capture more profit. As opposed to having fixed reward to risk, you look at the movement in the price to dictate your stop loss. That could be a really good way to do things. Now, this is a bit more subjective sometimes. You gotta be able to find out how price moves, but that could be a really big jump in your profit. The same thing here is near the support and resistance areas. We'll talk about this now. So the difference between the high and the low will be look at the highs and the lows. For example, it could be your high on a weekly chart. Right? You put stop loss at the high on a weekly chart. Your weekly chart candlestick is like this. For example, the previous one. And you enter somewhere here. Let's say you short that candlestick. So you were shorting it around here. Now you could decide that you want to put just your take profit around here. Okay, around here. So that you're able to kind of get near the lows over the candlestick before. That could be good. Support resistance areas is support resistance areas in the market. As long as it's in the market when you have a range, could be a really good place to put your take profit stop loss. Okay, here we talk about take profits. So this is a big one, near round numbers. Okay, if you look close in the market, especially on lower time frame, you'll see that price usually hits round numbers. These are, for example, on Euro USD. These would be like 1.14, okay, or 1.18. These are round numbers in Forex. I've done a video on that in the past too, like a long time ago. Leave it in the description below if you want to check it out. Make a big difference. Now on USD CAD is like 1.32, I believe, or 1.30. These are big numbers. And when price hits these numbers, it usually makes kind of stop, like a sideways market a little bit, and consolidate a little bit, or it does something strange, or it just reverses right away. So that could be a good place to put your take profits, right? Near these levels, especially if you get close to them. And the last one, of course, is having multiple. We talked about this before. Let's say you use these two here, so 1-to-1, 2-to-1, or you can use a mix of both. You use like one that's fixed reward, one that's support resistance areas. So by combining, for example, these two, you will be able to kind of have a trade you enter here, stop loss here, stop loss, trade, and then first take profit. And then let's say you would enter here, stop loss there, and then you could put your other one here. Instead of putting it to do one or whatever, you can be more flexible with your take profit. So just an example here quickly on the screen, but hope you understand the principle. If you have any question on this, let me know in the comment below. I'll be happy to help. But that's just the overall principle there. Again, different stop losses. Same thing we talked about before. So beyond highs and lows, you can put your stop loss there. ATR base, you use the ATR to figure out by how much or how many points the pair move on a daily basis or weekly basis or whatever that is. And that gives you an idea of how far to put your stop loss to not be stopped out too easily. That makes a big difference too. Beyond support areas, we talked about this before, or at some retracement points. So for example, when you're in a trend, price will be trending like this. And then let's say you enter the market around here. When price does this over here and price gets here, it makes sense to move your stop loss here to a previous retracement point. That could be a really good place to put it. Actually, this makes a lot of sense in a trending market. Not so much sideways, of course, but when price is trending, you're going to capture a lot of profit that way. And if you trade your stop loss, perfect way to do it. So trading your stop loss. Big difference. Now that we covered stop loss, take profit, and different things about this, the week and hours of the day, the other important thing here is scaling into trade. I've done a video on that in the past in a lot of detail, so I won't be talking about it that much here. I'll leave it in the description below. So that is scaling in. So what you can do here is you can have same size orders. You want to turn the market with multiple order of the same size, you can do that. You can use a feeler. A feeler is like a small order, like a tiny order. So you have a 1% total risk per trade. You would do like a, let's say 0.2%, and then 0.8% later. Okay, that's your feeler. That's a small position. So that could be a way. On pullback, so you add more as you pull back. And again, if you want to check it out, this video here, it's going to talk more about how to scale in detail. So with examples in the chart. Or on any move in the market. We talk about this again in the video here. Check it out. We'll cover that. Next step here is what makes your trade not profitable. So you want to find out what is it in the market that makes your trade not profitable. Okay, it could be many things. It could be, for example, kind of any news in the market. I'm not saying this is going to be the case for you. For me, it doesn't matter. But it could be news. Okay, it could be when market is low volatility. Okay, low volatility can make a big difference. It could be when, say, you have like choppy markets. Okay, again, kind of like volatility a little bit, but choppy markets. It could be anything of the sort. You want to find out for your strategy, what is it that makes your strategy less likely to work? Or you can do the reverse. What is it that makes your strategy working? Like if you try to break out, what makes a great breakout? And find out these things, list them down on a sheet of paper. You're gonna have like 1, 2, 3, 4, 5, and then try to work on them, try to implement them in your strategy. Now, for me, I know for the Bollinger Band reversal, one thing that makes a big difference is because we have the band like this is the middle band, this is the top band. So this is the middle, this is the lower band, this is the top band, or the highest band. So when you enter the market and the candlestick here close beyond the middle band, and you have to enter here, your trade, your bullish trade, that is not good because you don't have enough room for profit here. More likely to be stopped out and less likely to reach a big level, a big target. So that for me doesn't work. Like this is one thing that I cut in my strategy, makes a huge difference. So those are all things you can think about, and I've kind of here given you everything to think about. Now it's your job to kind of take it, run, and work on it. If you want to be able to work with me one-on-one, if you want to get my help to be able to get profitable and scale up your trading, I'll leave a link below also to apply for our Desire Trade Academy, where we teach you things that other academies don't talk about, and also help you build the right trading skills for more freedom in your life. So check that out, and I'll catch you back here in the next video pretty soon. Ciao.